Mela, in question 5, which is also adapted from May-June 2021 paper 1 PBE, we've got information about Tando Limited, which is a company that sells goods at a markup of 80%. Highlight that. We have a pre-adjustment trial balance for the year ended the 29th of February 2024, meaning that the financial year started on the 1st of March 2023. I'm going to jump straight to nominal account section. I've got sales there amounting to 16,741,800. Cost of sales 9,301,000, and I have debtors allowances of 641,800. I will just take that 641,800 and minus it from sales. Then record all the expenses as they appear in the pre-adjustment trial balance. It's all these expenses that I've recorded. The first one says no entry was made for goods sold on credit. Basically, they were sold on credit. It said no entry was made for goods sold to a debtor. So those goods were sold on credit. The selling price of the goods is 106,200,000. I'm trying to take a look at this question. It is actually very similar to the previous one. I know when I'm doing something that is pretty much the same. They're very, very similar. They are similar. Because they're similar, I am just going to give you solutions for this one, which is question 5. They're very, very similar. They're very similar. Given this side. Okay. Let me just give you solutions to this. All right, let's check this one here, which is question 6. It is adapted from IEB paper 1, November 2022. So we have information. The following information was extracted from the financial records of Very Cool Pty Ltd. The company is authorized to sell 2.4 million ordinary shares. Very Cool Pty Ltd uses a 25% on cost, a markup of 25% on cost. And they gave us a couple of balances, to be honest. For now, these ones I won't be able to use, right? But what's most important at the moment is the end of the financial year. So we need to prepare the statement of comprehensive income statement for the year ended 30 June 2023. We have a pre-adjustment trial balance from of a Very Cool Pty Ltd on the 30th of June 2023. Now, since this is the end of the financial year, it means that the beginning of the financial year will be the 1st of July 2022. Then we are given all these balances here. We've got sales, cost of sales, but there are a couple of balances that I'm more interested in under the financial position. The first one will be this consumable stores on, which relates to packing material on the 1st of July 2022, which is 7,500. We also have accrued commission income on the 1st of July 2022, which will be the 9,800. All of these, we have them at the end of the current financial year, and they were there at the end of the previous financial year. They were supposed to have been reversed because these are current. For the first one, consumable stores, that is a current asset. It was supposed to have been reversed on the 1st of July, and it wasn't reversed. And we also have that accrued income, which is also a current asset. It was supposed to have been reversed at the beginning of the year, and it wasn't. Now, to reverse them, we are going to take that 7.5, and I'm just going to quickly look for packing material. I'm going to take that 7.5 and add it with the packing material that appears under operating expenses. Of which is not given to us in this question. So basically, it's given to us in the statement of profit or loss. So we have packing material of 11,550. I will add that 7,500 to that because they were not used last year. They are used this year. They're supposed to have been used this year. That's why I'm going to add them. They will form part of your expense. And that commission income of 9,800, it was not income last year, but it is income this year. So I was going to add it to my commission income of 50,000. So I was going to add that 9,820. It wasn't income last year, it was subtracted because wait. Before I even say that, let me check. Was it accrued commission income? So if it was accrued commission income, it was added last year. It was income last year. So this year is not income. And we need to subtract it from that 50,000. Apologies for that. And that's what you are supposed to have done here. I'm going to go straight to the first adjustment. But before I go to the first adjustment, I want to come here. We've got debtors allowances of 65,200. I will take that and subtract it from sales immediately. There we go. Under adjustments, what do we have? We've got the sale of merchandise on credit to end the silver for 10,000. I'm sure you're very enough with this because I've been repeating this for a while now. So that 10,000 rand, it relates to the sale of goods on credit. Since it relates to the sale of goods on credit, I am going to take that 10,000 rand and add it to sales. At the same time, I will add it to my trade debtors, which is in trade and other receivables. So we'll just add it there. to my trade debtors. That is because when you sell goods, sales will increase at selling price. But if you sold them on credit, debtors control will also increase at selling price. So that 10,000 rand I am going to add to sales. So that's what I'm going to start with. And then add it to my debtors control in trade and other receivables. And this is what I've got in trade and other receivables. I've got already my debtors control amounting to 180,500. To that, I will just add 10,000 rand. We still good. I'm done with the 10,000 rand. But now I need to find the cost price of that 10,000 because the sale of goods and the return of goods, they affect four accounts. I will, since that 10,000 rand is the selling price, I will simply take the 10,000 rand, multiply it by 100, divided by 125. And that will give me the cost price of those goods, which will be 8,000 rand. 8,000 rand will increase cost of sales. Cost of sales increase at cost price when goods are sold. But at the same time, because these goods were sold, it also affects trading stock. It affects trading stock negatively. So your trading stock needs to decrease by about 8,000 rand. Already in the pre-adjustment trial balance, trading stock is recorded at 481,230. All I have to do now is to subtract the 8,000 rand. And that is what I will need to do. So it has affected four accounts in total. That's it. Let us move on to the next one, to the next adjustment, to something else. Let us move to the next adjustment. Adjustment 2, a credit note was issued. It was not received, it was issued. If it was received, it affects trading stock. Actually, it affects whatever was returned to the creditor and creditor's control. So this credit note was issued by us. If it was issued by us too, it says to Casey Tolle in respect of goods returned. It will affect four accounts. We debit debtors allowances, we credit debtors control at selling price. We also debit trading stock and we credit cost of sales. Wow, I actually mixed them up there. We debit debtors allowances, we credit debtors control at selling price. Then we debit trading stock, we credit cost of sales at cost price. It affects those four accounts. If you're wondering which four accounts are you talking about, please go back and check out the first video the first two videos where I indicated what happens when goods are returned. So these are the four accounts that will be affected when a debtor returns goods. But I'm gonna read the whole adjustment so that I can get the overall picture of what is going on. And according to this, it says that the cost price of the goods was 6,000 rand. Great. So we're not given the selling price, we're given the cost price. Guys, before you complicate your life, work with what you are given. Due to the stock being damaged, it was returned to the supplier. So we got the stock back from the debtor and then we returned it to the supplier. Great. They agreed to credit our account, less handling and repackaging fee of 400 rands. Their transaction was not recorded. I'm going to start with that 6,000 rand because, as I've said, it affects four accounts, but it is the cost price. So I will only focus on the accounts that are affected by the cost price, which will be cost of sales as well as trading stock. Cost of sales will decrease. Cost of sales only increases when goods are sold, and it decreases when goods are returned at cost price. So I'm going to subtract 6,000 rand, which is the cost price of goods returned from cost of sales. At the same time, I am going to increase my trading stock, but I'll come back to the increase of trading stock later on. Let's go to the selling price. To find the selling price of that 6,000, I will basically under descriptions, I'm going to attach a link to the calculation of cost of sales, gross profit given the markup. Because some of you I know don't know how to calculate cost of sales or selling or sales or the selling price given the markup and the cost of sales or given the gross profit and the markup. You don't know how to calculate cost of sales and sales. So try to understand the video link that I'm going to attach and the description for this video. What I am going to do, that 6,000 Rand is the cost price. To get the selling price, I will take the 6,000 Rand, multiply it by 100 plus the markup divided by the 100, which is the cost price. Now take 6,000 divided, 6,000 times it by 125 divided by 100. 125 is 100 plus the markup. And that will give you 7,500, which represents debtors allowances. Debtors allowances reduce sales at selling price. At the same time, debtors allowances will reduce what the debtors are owing us in trade and other receivables. So you're trading other receivables in trade debtors. Well, in trade and other receivable, trade debtors will decrease by 7,500. The only reason I didn't record what they said for trading stock where we're supposed to increase trading stock. It's because they said these goods that were returned were damaged and were returned to the supplier. So we're going to add to trading stock for receiving the goods back from a debtor, and then we subtract from trading stock because we return those goods back to the creditor. So that is why for that 6,000 Rand we have plus minus. Plus is for us taking the goods back from a debtor. The minus is for us taking the same goods that were added. We are subtracting them because we are taking them back to the creditor. But when we take them back to the creditor, as you can see, it will reduce your trading stock. It'll also reduce what we owe the creditor by the cost price of those goods. So I am going to go to trade and other payables, and from trade and other payables, I will subtract 6,000 Rand from trade creditors. We were given 325,000 as trade creditors. You just take it and subtract the 6,000 Rand. Done. But that particular adjustment isn't done. We're not done with it yet. They say they agreed, so the creditor agreed to credit our account less handling and repackaging fee. Now they charged us a handling and repackaging fee. Because it's a fee, it is an expense. We are going to go under expenses, and when we get to expenses, we are going to come up with a new expense. I will call it handling fee. You can recall it repackaging fee or handling and repackaging fee. It's up to you, of 400 Rand. It is an expense to us. They charged us that. Remember when you buy goods, they come packaged and you tear off the package to get the item. But when you return them, because you tear off the package, they're going to charge you for the one-out package that you damaged. And here they charge us 400 Rand, which is an expense, normal expense. And then that 400 Rand, we didn't pay for it. So we owe the creditor that 400 Rand that they charged us. So you're going to go to creditors control and just add the 400 Rand that they charged us. On the third, it says that the owner had donated stock to Pilang, a school in Guatemala. The entity forfeited 1,250 gross profit. I've actually done these things under descriptions. What I'm going to do with it is it's donations of stock. They gave us the profit markup, the markup that we forfeited. So that's why I said I will attach a link in the description so you know how to deal with this. They gave us 1,250, which is your gross profit. But that 1,250, we don't care about it because it's donations. Donations must be recorded at cost price. So I'm gonna take that 1,250 times it by 100 and divide it by, what was the markup again? Was it 50% or was it 25? I think it was 25. I'll just divide it by 25. And then it'll give me my donations of 5,000 rand. Because they said 1,000, that 1,250 was the gross profit. So it is at 25%. We want 100%, because cost of sales will always be at 100%. It is 100% of the purchase price. Because it's 100% of the purchase price, when you record donations of stock or any other item, it's always recorded at cost price. It affects two things. Donations is an expense. We're going to record that under operating expenses, but we're going to record donations at cost price, which is that 5,000 rand. I got it by taking 1,250 times 100 divided by 100 and, divided by 25, which gave us 5,000 rand. But that 5,000 rand is the donation of stock. It decreases the value of your trading stock at cost price. I am going to go to my trading stock and subtract 5,000 rand from my trading stock as these goods were donated. We don't have them anymore. They're gone. We done? With number 3, yes, we are done. Number 4. Interesting. So we had a robbery that took place and 8,000 was stolen from the cash register. We know that cash register, in the cash register, we keep a cash float. Anything that has to do with cash, you'll find it in cash and cash equivalent. So this cash was stolen, 8,000 rand, as well as 30,000 worth of stock. The insurance company had advised that cash is not insured. Because cash is not insured, it means that that 8,000 rand, we will never claim it from the insurance company. So we won't be reimbursed for losing it. It's gone. It's a loss. So that 8,000 rand, because it was not insured, any loss that was not insured is a loss. And losses are recorded the same way as expenses. Losses are expenses, and we'll record it under expenses as loss due to theft. 30,000 worth of stock was also damaged. So I'm going to go to trading stock. You take the whole amount of stock that was damaged, you subtract it from trading stock, good people. All of it, not some of it, all of it. You deduct it from trading stock, as I've done, because we lost all of it. When you claim from the insurance company and you claim for your insurance cover, they won't give you your stock back, guys. They will only give you money. So their stock is gone, it's lost. So go to your trading stock and subtract the entire stock that was lost. How do I How many Good. Then they say stock was insured. Good. So I can't, if it was not insured, I was going to go to the statement of profit or loss, and to my loss due to theft, I was going to add the entire 30,000 because I won't get it back. It's gone. But fortunately here they say it was insured. I will only lose the part of it that was not insured. Now they say under the following clause, it was insured under the following clause. The stock loss up to the value of 70,000, less an excess of 15% of the claimed amount. They will pay the claim in July 2023. For me to know about the excess, some guy some time back, they stole my laptop, right? And I went to the police station. They stole my laptop, and I left it at home at that time. And I used my laptop to teach. So that day, I just left it at home, and they stole it. So all of these lines in the notes disappeared. So there's someone out there that has my notes. And when I was claiming insurance for the cell phone, because the laptop was not insured, so the value of that laptop, all of it was a loss. But when I claimed for the cell phone, the cell phone was covered only for 3,000. And then they said to me, for me to be able to claim that 3,000 rand back, I need to pay 500 rand. which to me didn't make sense. That's what an excess is. So you pay, so I had to pay 500 rand and then get the 3,000 rand back, which to me didn't make sense. Why didn't they just pay me 2.5 instead of asking me to pay the 500 rand? It did not make sense at all. That's what an excess is. That 500 rand that I'm paying, it's a loss. It is a loss. Now, here they're saying that any loss of stock that does not exceed 70,000 rand will be covered, but we have to pay 15% of the claimed amount as an excess. And obviously, it means that the insurance cover will only pay us 85% of whatever we claim. We're claiming 30,000 rand, so all of it will be covered. So 85% of that claim will be covered. We're going to get it, but we'll only get it at the beginning of next year, which is in July 2023. Remember, the end of the current year, it's June 2023, the 30th of June 2023. Now, this is how you need to remember this. I did a bit of a summary to make sure that you get this. Summaries are key, guys. They will help you a lot. Um, Summaries are just awesome. So I did the summary over here. So we lost stock worth 30,000. So the entire 30,000 rand subtracted from our trading stock. So cost price of stock loss. Then we're going to divide it into two between what we're going to get back from the insurance company, which is the 85. Now, someone might be wondering, but how did you get that 85%? I got it by taking 100% minus 85%. I mean, 100% minus 15%. That's how I got 85%. Because we were not covered for the entire amount. 100% of 30,000 rand, we were only covered for 85% because we had to pay the excess. So this is what we're going to get from the insurance company, which is the insurance claim. If we were to receive it in the current year, we were going to take 85% of 30,000 rand and add it to bank. But we can't do that because we're not getting the money this year, we're going to get the money next year. And the 15% what we call a loss because we will never get it back. So you're going to take the 30,000 rand times it by 15%. It'll give you what we will not get back from the payout. From the payout, we will just get 25,500, and the loss will simply be 4,500. That 4,500 will go to trading at line. The 25,500 will go to trading at receivables as insurance receivable, because that's what we're gonna get from the insurance payout. But the 4.5, we will never get it back, so it's a loss due to theft. A loss due to theft will be recorded in the statement of profit or loss. And when we record it in the statement of profit or loss, remember we already have a loss of cash of 8,000. We just have to add that 4,500 rand to get the total loss. From stock, we only lose 4,500 rand. The other one, we're gonna claim it and get it from the insurance company. And the one that we claim, we have not yet received it. So because it is still owed to us by the insurance company, we're gonna record it here as insurance receivable. I also showed you calculations in brackets as to how I got that 25,500. We're still good. Great. Number 5 says that the door was damaged during the robbery. Very cool. PTY Ltd paid 3,500 to have the door repaired. The payment was incorrectly recorded as repairs. I will just stop right there. When they say the payment was incorrectly recorded as repaired, that is a correction error. You did that under the general journal. Correction of error here means that we debited repairs, right? And we're not supposed to have done that. And the reason why we're not supposed to have done that is because the landlord acknowledged that it was his responsibility, and so that they may deduct it from the June rent that is still owing. Rent expense has remained unchanged during the year. So we're gonna credit repairs. And then we're going to reduce accrued expense and um, accrued expense that relates to rent. And the reason why we have accrued expense is because they said here rent was only rent was only was only received for 11 months. Rent was only received for 11 months instead of 12 months. So we're missing 1 month's rent. And they didn't say anything about rent. Well, they told you that rent remained unchanged for the entire year. So there was no increase or decrease in rent. So there was no uh, reason for us to do the timeline and do the X's and the percentages and whatsoever because the rent remained the same for the entire year. I'm going to start with correction of error first. I am going to go to repairs, and from my repairs, I am going to subtract 3,500 because we are not supposed to have paid that. It is the landlord that was supposed to have paid for it. Then we're going to go to our rent expense. Our rent expense it's 115,500, which is for 11 months. So if I divide that 115,500 by 11, it'll give me rent per month, and only 1 month's rent is missing. So I'm going to add that 1 month's rent that is missing, which we call accrued expense. Please note that the repairs 3.5 doesn't affect the rent expense. The rent expense remains the same. It doesn't affect it at all, guys. It remains the same. It will remain so it's 115,500 divided by 7. It gives us 10,500. So that's how much rent. So our rent per month was 10,500, meaning that for the whole year, our rent was supposed to have been 126,000, but we only have 115,500. That's why we increasing that 115,500 by 10,500 so that we get to 126,000, which becomes our actual rent expense. However, we still owe that 10,500. We are supposed to record it in trade and other payables as accrued expense of 10,500. This is what we owe. But here's an amazing thing. Of this 10,500, we actually paid 3.5. Because remember we paid for repairs, 3,500. And those repairs, the landlord acknowledged that it is their responsibility. It wasn't their responsibility, but we have already paid for them. So they are going to deduct what we have already paid from the rent that we were still owing. So from that 10,500, they will subtract the 3,500 that we have paid that was with respect to repairs. So when you go to trade in other payables, you are going to subtract the 3,500 from your accrued expense of 10,500 because we have already paid for it. Number 6 says that a trading stock to the value of 14,000 was used for demonstration purposes during the year. This must now be revalued to 8,000 so that it can be sold at a profit next year. A reduction of an asset, a reduction of the value of your asset will be an expense. So how much will this reduction be? Our trading stock was valued at 14,000, but now it needs to be revalued to 8,000 rand. So I'm going to go to my trading stock. Take the 14,000 minus the 8,000. So our trading stock is supposed to decrease by 6,000 rand. So that 6,000 rand will reduce our trading stock because we are devaluing. That trading stock is in that 481,230. So we need to, it's already sitting there at 14,000. So we need to take it down to 8,000 by 6,000 rand. So that is why for my trading stock, I'm going to subtract 6,000 Rand. This 6,000 Rand, because it reduces your stock, we are going to record it as revaluation loss or loss due to revaluation. So I will record it here as trading stock devalued, but I could have just said loss due to revaluation of trading stock, which is the 6,000 because it reduces the value of your trading stock. Let us go to 7. A physical stock can't reveal the following. Stock on hand on the 30th of June 2023 gave us trading stock of 480,830. I'm going to go to my trading stock and close off. So I've just adjusted my trading stock as per the trial balance. I'm going to close it off. Before I do that, I think I forgot to subtract the $8,000 lost cash, which was a cash float. We're supposed to subtract it from cash and cash equivalent. Apologies for that. Back to what I was busy with. I am going to close off my trading stock. So the adjusted amount for trading stock will be 432,230. I'm going to compare that to the stock count. And the stock count was given to us as 480,830. So the stock count trading stock is more than what we have calculated or we have adjusted. Because it's more, the accurate one is the one that was counted. So the one in our books, which amounts to 432,230, needs to go up. And when it goes up, we call that upward amount, the amount that we're increasing it, a trading stock surplus. So that trading stock surplus of 48,600, we are going to record it in the statement of profit or loss as trading stock surplus under other operating income. Remember to show workings in brackets. We're still going, right? Awesome. Then they say packaging material. 20% of packing material is unused. Note the accountant forgot to reverse consumable stores on the 1st of July 2022. That one is very interesting. 20% was unused. It means that 80% was used. Now we're gonna deal with the reversal first. Remember that 7,500 that I told you about. I'm gonna take it and then add it to consumable store, not to consumable stores. I'm gonna add it to packing material. Packing material is sitting at 11,550. I'm gonna add the 7.5. And then after getting my balance, I'm gonna close the brackets. And then 80% of the total packing material was the one that was used. So you close the brackets. So it's 11,550 plus 7,500. You close the brackets and then you times the total by 80%. So packing materials used will be 15,214, meaning that the 20% was unused. So the unused 20%, we're going to record it in the inventory node. And unfortunately, we were not asked the inventory node here. Number 8, we need to provide for outstanding interest on fixed deposit. Interest on fixed deposit is not capitalized. So when they say it's not capitalized, they're supposed to give you the value of your fixed deposit. You will take it and multiply it by the interest on fixed deposit. The value of your fixed deposit is 310,000. You will take it and multiply it by 80%. It will give you interest on fixed deposit. And you will notice that If I take that value, let me just see how much I'm gonna get. So this is how much my fixed deposit for the entire year is supposed to be. It's supposed to be 310,000. You multiply it by 0.08, it'll give you 24,800. But look at what we have as interest on fixed deposit. We've got 12,400 and 430, which is way less than what we calculated. So we need to increase our fixed deposit to 24,800 by the difference, which is 12,340. So interest on fixed deposit will be included under interest income. Already we've got 12,430. It's supposed to be 24,800. It means that we are missing 12,370. That 12,370 is what we call accrued income. Accrued income will be recorded in trade and other receivables as such. You will notice that already we have accrued income of 9,800. I'm simply going to go there and add the 12,370. We have had that from the beginning of the year. We need to reverse it. And that's it. Let's go to number 9. A debtor has been declared insolvent. His estate paid 40 cents in advance, which amounted to 7,200. So that 7,200 is the 40 cents. And that was recorded in the CRJ. We need to write off the outstanding amount. We're going to come here and calculate our bad debts quickly. So our bad debts, the amount that was owed to us is X. We don't know how much it was, but we were given this 7,200, and that 7,200, it represents the amount that we received, which is the 40 cents. Meaning that we did not receive the 60 cents. To get the 60 cents, we are going to take the 7,200 times it by what we want, which is the 60, divided by what we have, which is the 40. It will give us 10,800. That 10,800, it represents bad debts. That's what we did not receive, which is the 60 cents. If you want the amount that was owed, the total amount that was owed, you could have just taken that 7,200 times it by 100 and divided by 40. It was going to give you the total amount that was owed. It is totally up to you as to what you want to do in order to get what you need, which was just your bad debts. We needed the bad debts, which is 10,800. That 10,800, we are going to go to the statement of profit or loss and add it to bad debts. And at the same time, we will subtract it from debtors control in trade and other receivables. As that money, we will never get it back from a debtor. So we write off the debtor. Writing off the debtor, you debit bad debts, you credit debtors control. So let's go to the statement of profit or loss. In the statement of profit or loss to bad debts, we will add the 10,800. Which will give us a total bad debts of 15,120. As I've said, I'm going to go to trade and other receivables, and I will subtract the 10,800 from debtors control or trade debtors. Number 10 says adjust the provision for bad debts to 5% of the outstanding trade debtors. Sometimes they'll say outstanding good debt. Sometimes they'll say book value of debtors. It's the same thing. You just take your debtors control balance after you've taken all the other adjustments that relates to debtors into account. In this specific question, that value will be the one that we have in the statement of in the pre-adjustment trial balance with by adding and subtracting all the adjustments that affected debtors control, get the balance of your trade debtors. After getting the balance of your trade debtors, multiplied by the provision percentage. So the balance of our debtors control will be 180,500 plus 10,000 minus 7,500 minus 10,800. You are going to get 172,200. Take that and times it by your provision for bad debts adjustment percentage of 5%. It will give you a final provision for bad debts that you have calculated, and the amount will be that 172,200 times by 5%, and the amount will be that 8,610. Then I will quickly calculate my net trade debtors by taking my debtors control of 172,200 minus 8,610. It will give me 163,590. However, I'm not done with that provision of 8,610. I have to take it and compare it to the provision that is given in the pre-adjustment trial balance for last year, which was 9,000 Rand. So the one for last year is more than the one that we just calculated, right? Which is 8,610. So it means last year's provision for bad debt needs to go down. And if your provision for bad debt goes down, if the one in the trial balance is more than the one that we calculated, the difference will be income, which will be 390. So we're going to take the provision that we have in the trial balance compared to the one that we just calculated. The difference between these two will either be income or expense. It will be expense if the one in the trial balance is more than is less than the one that we calculated. There will be income if the one in the trial balance is more than the one that we calculated. So it was more by 390 in the specific example. That is why that 390 we are going to write it as provision for bad debts adjustment and the other operating income. It means that you're taking a provision that you have in the trial balance, you're reducing it. And when you reduce it, the difference will be income. Now it says on 11 on the 11th adjustment that a tenant has paid until the 31st of July 2023. Rent was increased by 660,000 on the 1st of April 2023. That one requires you to draw the timeline. You will not survive if you don't draw the timeline, which will start at the beginning of the financial year, which is the 1st of March. I'm lying, actually. It's the 1st of July 2022. It'll end on the 30th of June 2023. But please remember that because there was a rent increase in the middle of the year, which was the 30th, was it the 1st of April? It was, I think it was the 1st of April. It was increased by 660. And we're gonna need the amounts up until the end of the year, which is June 2023. But they told you that the rent for July 2024 has already been received. Because it has already been received, it means that 1 month fall outside the financial year. We need that month, which is the month of July. We need rent for that month, which is the month of July. It means that before the 1st of April 2023, rent was X, but for how many months? It was X for 1, 2, 3, 4, 5, 6, 7, 8, 9. It was X for 9 months. And then thereafter, it increased by 660. So it will be X plus that 660 for 4 months. Why do we go through all of that? It's because we do not want rent for July. It is outside the financial year. We have received it, but we have not yet ended. And when you calculate all of this, because it was increased by an actual value, it will be 9x plus 4 into x plus 660, 660, which will be equal to 88,440. Now cross multiply, cross multiply, don't cross multiply. You break the brackets here. So when you break the brackets, you will just say 4 times x, and then take the same 4 times it by 660. And this is what you will get. Add all your x's. So your 9x plus 4x will give you 11x. Transpose that 2,640 to the other side and then divide by 13. It'll give you rent per month. But the value of x that you get here is before the increase. So we need to increase that 6,600 because that is before the increase. That is the x. But after April, it was no longer 6,600 6,600. It was increased by 660. So when you take the 6,600 and you increase by 660, it'll give you the increased amount of 7,260, which was the rent that we received from April. And we received it for April, May, June, and July. But the July one is the one that we don't want. That's why we went through all of this to find the rent for July, which is at 7,260. We do not want it because it falls outside the financial year. We did not earn it. It is what we call income received in advance. We are going to basically go to our rent income. And from our rent income, we will subtract that 7,200 and I forgot to record the provision, imagine. We're going to subtract that 7,260 to get our rent income. The actual income is supposed to be 81,180. But that 7,260, we are going to record it in trade and other payables as income received in advance. Or deferred income. It's up to you as to what you want to call it. Next one deals with depreciation. On vehicles, we depreciate vehicles at 15%. On cost, equipment, it's at 10% at diminishing balance method. But they told you that a new equipment was purchased for 24,000 on the 1st of September 2022, which is within the current financial year. This has been properly recorded. Interesting. I will start by depreciating the easiest one in this case. The easiest one to depreciate will be vehicles. So you will just take the cost of vehicles, which was at the beginning of the year, which was 520,000, and just times it by your depreciation rate. Normally I normally advise my students to first find the carrying value at the beginning of the year. But when you take 520,000, you times it by the depreciation rate of 15%, it will give you 78,000 rand. Normally that 78,000 rand will added as depreciation in our statement of profit or loss. So that is only the depreciation on vehicles. Okay, I chose everything. But when it comes to equipment, remember with the equipment, they told you that there was a vehicle that was, there was equipment that was purchased for 24,000 rand, but that equipment has already been recorded. It means that the equipment amount that you're given in the pre-adjustment trial balance, that 308, includes the 24,000. And we can't depreciate them at the same time. And the accumulated depreciation on equipment, that 170,500, only relates to the equipment that was rare at the beginning of the year. So I need to find the cost price of equipment at the beginning of the year. And obviously, if you haven't done depreciation, this won't be in your exam. But we're going to do it later on if you haven't done it. Okay. I'm just giving you this as an example. If it comes out, just know that you won't have to calculate it. It'll be given to you if you haven't done it. But with the grade 11s, you have done this. So you need how to know how to do it thoroughly. You are going to take the 308,000 and minus the 24,000 rand, which is the cost price of the equipment that was purchased. That will give you the cost price of equipment that was there from the beginning of the year. And that will be 284,000 rand. Then you're going to take the 284,000 rand minus the accumulated depreciation of equipment at the beginning of the year, which was that 170,000. It will give you carrying value at the beginning of the year, and which is 284,000 minus 170,500. It'll give you the carrying value, and your carrying value at the beginning of the year, which is what you need to calculate depreciation, will be 113,500. Then you're going to take that 113,500 multiplied by the depreciation rate of 10%. It will give you a depreciation of old equipment, which will be 11,350. Returns, please ignore this because we haven't done it yet. It'll be given to you in the answer book. You won't have to calculate it. Grade 11s, though, you have done this a number of times. So you need to know how to calculate it. Once you have calculated that depreciation, this is for old equipment. The new equipment that was purchased during the year, you will just take the cost of that equipment, which is 24,000 rand, and just times it by 10. But it was purchased in September. So we've got September, October, November, December, January, February. So for this year, it'll be September. Let me just check. When in September was it purchased before I include a wrong month? If it was purchased at the beginning of September, on the 1st of September, I'm going to include September count. So we've used it from the 1st of September. So we'll include September, October, November, December, January, February, March, April, May, June. So that is 10 months. In the current year, we've used it for 10 months. So we'll depreciate it over 10 months. We are going to basically just take that 24,000, times it by 10%, times it by 10 over 12. It will give us depreciation of the new equipment, which will be 2,000 rand. And then that 2,000 rand, you're going to add it with the 78,000, add it with the 11,350, and it will give you a total depreciation for the current year. And that total depreciation for the current year, you are going to write it in the statement of profit or loss as depreciation. And it'll be the sum of all of those. Okay. Let's move on to this one here. So here we've got a loan statement from ABC Bank. It reflected the following. The balance of the loan at the beginning of the year was 560,000. The repayments amounted to 20,000. We are missing interest, but they also gave us the balance at the end of the year. Then they say interest is capitalized. After that, they said 150,000 rand of the loan will be repaid during the next year. The one that will be repaid during the next year, you normally take it to trade and other payables. and you record it in trade and other payables as the current portion of the loan. Then we need to calculate the interest. To calculate the interest, you need to use the table. I will start with the repayments. Because they said they were per month, you need to find the repayments for the entire year by taking that 20,000 rand, multiplying it by 12. And the answer that you get there, you will simply put it in brackets as it represents the repayments, and that will be 240,000 rand. Now, to find your interest, you are going to take this 376,000, you're going to add the 240,000, then subtract the 560,000. It'll give you your interest. Your interest will be 56,000. That 56,000, we are going to put it as interest expense in the statement of profit or loss, or i.e. the income statement. You put it in brackets because it's an expense. That's it with respect to interest. Now, the last part. They say that the salary journal for June 2023 was completed. The accountant, however, forgotten to complete the postings to the general ledger. Had, however, forgotten to complete the posting to the general ledger accounts. The salary journal revealed the following. We've got gross salaries, which was a question mark, but they gave us all the deductions and net salary. And then they say the employer contributes 3/4 of the total pension amount to the pension fund and rent on rent basis to the medical aid fund. So it means that the employee contributed 1/4. So that is 1/4. So if I want 3/4, I'm going to take that 1/4 multiplied by 3. And they say for medical aid is the same thing. So if they contribute 500, we also contribute 500. Remember, employers' contributions, we need to include them as expenses in the statement of profit or loss. But first, I'm going to start by finding my gross salary. Gross salary, you have to take your net salary and add all the deductions. And that'll give you a gross salary. So you're going to take 350,000, right? Add it with your gross salary, which is your net salary that was given to you. Okay, I see insurance here. Sorry about that. Before rushing to salaries, I jumped to 14, which says that insurance amount of 8,800 was paid on the 1st of May 2023. This cover will lapse on the 31st of December 2023. So if it was paid in May, it means that we have May, June, 2 months of this insurance fall within the current financial year. The other months fall outside the current financial year, which will be July, August, September, October, November, December, which is 6 months fall outside the financial year. So it is 6 months out of the 8 months. So this insurance was for 8 months. So to get the insurance, you can draw your timeline if you want to. To get the insurance that falls outside the financial year, you will simply take the insurance amount of 8,800, you times it by 6, you divide it by 8. It'll give you the insurance that falls outside the financial year, which is a prepaid expense. It'll be 6,450 because it falls. Now, how do I know that this 8,800 has already been included in the insurance that is given in the trial balance? It is because they told you that it was paid. And insurance in the trial balance is all the insurances that were paid. So all I have to do is to take the insurance that is in the trial balance, subtract the number of months that fall outside the financial year that were prepaid, and that will be 6,450, and then we'll get our insurance expense. That 6,450, we will record it in trade and other receivables as prepaid expense. Now, going back to the salary. For me to get the gross salary, I am basically going to take the net salary. You add all the deductions. So you take this, you add it with that. You add it with that. You add it with that. It will give you a gross salary. And the gross salary will be the one that you record under salaries and wages, which will be 16,200. And all the deductions, I'm going to start with medical aid. It was 500. Contributions by the employer was 500. And when it comes to the pension, you were supposed to take that 2.5 multiplied by 3, because if the employee contributed 1/4, it means we contributed 3/4. So that 2.5, it is the quarter. So to get the 3/4, you just have to multiply it by 3, which will give you 7.5. Those will be employers' contributions. Your total salaries and wages will be 366,200, and your total employer's contribution will be 101,000. The net salary and the deductions, we are going to record them in trade and other payables. The net salary will be included. We added to creditors for salaries. And for pension, the deduction is 2.5. You're going to add it with, for medical aid, the deduction was 500 Rand. You will add those with the contributions by the employer. Pay as you earn it was also given to you, which will be owed to SARS. It will be 3,000 Rand. So you started with what you were given, and then you calculate your net salary, which is your net salary. You are going to add it to creditors for salaries. It will be 10,200, and then to pension you will add 7.5. To medical aid you will add 800. Remember, to pension fund and medical aid, it's what the employer contributed plus what the employee contributed. You add them together. That must be paid to the fund. Now, creditors for salaries, in this case, trade creditors will be 319,400. Creditors for salaries will be 70,700. And pension fund will be 19,600. Medical aid will be 12,330. And accrued expense will be 7,000 Rand. That will be what we have to record in trade and other payables. And that's it. That's it. My problem solving for this one was the 16, which is 50,000 Rand. So they said 50,000 Rand of the fixed deposit will mature on the 1st of February 2024. Please note that this will mature in the next 12 months. Any fixed deposit that matures within the next 12 months, we are going to add it under cash and cash equivalents. So we're going to say fixed deposit maturing within the next 12 months, and it will be 50,000 Rand. Then you can simply calculate the cash flow, which will be 2,000 Rand. Just to complete the entire thing, please remember to put cost of sales in brackets, and those are the totals that you will get. You will not require to calculate gross profit or other operating income. And this is what you will have under your operating expenses. However, you were given your operating profit, so you just had to manipulate to get your profit before interest expense, which is 55,010 plus 24,800. It gave you 479,810. Then you subtract the 56,000 you will get your profit after tax of 423,810. You were given the net profit after tax. So you had to find the difference between these two to get your tax amount, which was 161,863. That was question 6. This will be question 7. Can try it out. And that'll be it. Just to, I feel like there's something that I forgot to do here. I did the income statement, trade and other receivables. I don't remember finishing off trade and other receivables. I would like to go back to it. The reason why I remember it, it is because there was that 9,800 that we had as accrued income at the beginning of the year. We can't have it at the end of the year. We can't have it. We're supposed to have reversed it because it belongs to last year. Just want to go back to that and see. Yes, accrued. You see that 9,800. We're not supposed to have it, so I'm going to subtract it to calculate my total accrued income because that 9,800 belongs to last year. It was not accrued income for the current year. It was supposed to have been reversed at the beginning of the year or during the year, meaning that our current accrued income will be 12,370. Yes, that's the one that I actually forgot to explain. Otherwise, everything is on point. I hope that was long actually. I hope you enjoyed that. If you have any questions, please feel free to ask. That's one of my question papers. Actually, it's last year's paper. I said this last year for my grade 11s and grade 10s. It was very interesting. Last year's paper actually. It was very interesting. I actually enjoyed it. I hope you did as well. Try out the last question, which is question 7. For any questions, let me know. For now, all I can say is possible.